Home Depot reported earnings that were higher than Wall Street estimates by a penny. But the nation's biggest home improvement chain also said fiscal year sales will rise only 2.6%, missing its original forecast. Laura Champine, an analyst at Cowen Co, has a neutral rating on Home Depot shares. She is with us by phone this morning. So, as we were saying, Laura, a mixed bag. What's your take? How is it going to affect the stock today?
It's a surprise given that sales trends were weaker in the quarter. They comped up less than 2%, very similar to Lowe's yesterday, and yet earnings beat by a penny, and they kept their earnings guidance for the full year. So they're doing a great job of holding expenses in line on disappointing sales trends. I think the market was aware that sales trends were not the way that we had originally expected entering the year. It's really not much of a recovery after 4 years of down comp, but I think the street will be impressed that their earnings are holding up even through that.
Okay, so analysts will be impressed. What do you think investors are going to do? Bid up the shares? They were up almost 1/3% yesterday after Lowe's came out, Home Depot's largest rival. And while its earnings and sales missed analyst estimates, it wasn't by as much as some people had feared.
I think that with the upside in EPS in Q2 and more importantly being able to maintain guidance for the full year and a sales miss which is less than Lowe's miss, they outcomped Lowe's, and it's only 0.1%, but for a company this big, being able to outcomp its rival is still important. Missing sales a little bit less, guiding down for the full year less than 1% of sales growth. I think that will be viewed as a positive. Stock probably reacts favorably today, but this is not the kind of recovery you would hope for in Home Depot given its sales trends over the last 4 years.
Sure, we've seen what's going on in retail sales, for example. Tell us, if you can take a step back, what Home Depot's numbers and Lowe's numbers tell you about demand for home improvement goods. Same-store sales on a worldwide basis for Home Depot up 1.7%. In the U.S., up only 1%. And that is quite a bit lower than what they reported last quarter at the very least. Is the trend on its way down?
The trend is on its way down. I guess the mixed bag of news is that the Home Depot and Lowe's most important quarter has just concluded. So we really won't know about future earnings until almost this time next year. But they did have a disappointing, this is their holiday season in the summer when people start to remodel. There is no doubt. But I do think that investors have anticipated that given the weak employment numbers, the weakening housing numbers, the weak consumer confidence. So I think really this is the best we could look for given the deterioration in home-related spending.
Okay, we've gotten the most important information out of Home Depot as it concerns their outlook for the rest of the year. But in light of that macroeconomic backdrop and what we heard from Lowe's yesterday, what do you need to hear from management on the conference call today?
It would be tough for me to upgrade either stock, Home Depot or Lowe's, given this weak recovery. Even though the valuations are reasonable, Home Depot still trades at a little premium to the rest of the market. So I think that investors are cognizant that at some point earnings will recover. It's not clear to us even if that will happen in a significant way in 2011. We'll have to hear from management what their long-term macroeconomic outlook is and really how much they can drive their sales on economies outside of our country that probably are growing faster.
All right, it does sound as though for the time being it will be tough to upgrade that stock from a neutral. Laura, thank you very much for joining us and sharing your insights on Home Depot. That's Laura Champine of Cowen & Company. She rates Home Depot a neutral.